I'm Eric Kane, the Director of ESG Research for Bloomberg Intelligence, and for this month's ESG News Bulletin, we'll highlight three key items. First, we'll discuss the Biden administration's joint policy statement and principles on voluntary carbon markets. Second, we'll discuss a few examples that demonstrate the importance of supply chain management. And third, we'll discuss a federal judge's decision to dismiss ExxonMobil's lawsuit over Arjuna Capital's climate proposal. I'll then be joined by Lauren Foster, a Bloomberg market specialist who will walk through how to use the CO2e and BI carbon functions on terminal to track carbon markets and reliance on offsets for top emitters. So in late May, the Biden-Harris administration issued a joint policy statement and principles on voluntary carbon markets. The statement acknowledges that currently several crediting methodologies don't yield the decarbonization outcomes they claim, and that credits don't meet the standards needed for a transparent market. Therefore, it suggests that action is needed to restore confidence in carbon markets, and it lays out 7 principles to help voluntary carbon markets achieve their potential. These principles include that carbon credits and the activities that generate them should meet credible atmospheric integrity standards and represent real decarbonization. That corporate buyers that use credits should prioritize measurable emissions reductions within their own value chain. And finally, that credit users should publicly disclose the nature of purchase and retired credits. In general, the statement affirms that voluntary carbon markets should play a role in decarbonization and could signal a shift toward renewed confidence in these markets. Research from the BI ESG team on this topic can be found on terminal at BI ESG Go. While the importance of supply chain management is nothing new, the associated regulatory burden is escalating, and June brought many examples of how these issues can manifest. For example, the FAA is investigating reports that counterfeit titanium was used by Spirit Aerosystems to make planes for Boeing and Airbus. Boeing and Spirit have been under heavy scrutiny since a panel fell off a plane during a flight in January. Counterfeit or falsified parts are a problem for the aerospace industry and pose significant safety risks. Product safety, including the detection of counterfeit parts, is in the top issue in Bloomberg's ESG scores for the aircraft and parts industry. And Boeing's shares are off more than 30% year to date. Meanwhile, Shein, the global fashion and lifestyle retailer, appears to have largely abandoned plans for a US IPO after facing pushback, including on social practices like limited insight into its supply chain, in particular cotton. The company is considering a London listing, yet 3 Parliament committee chairs raised similar concerns, explicitly citing labor conditions in factories. Alicia Kearns, chair of Foreign Affairs Committee in the UK House of Commons, said, with Shein's prices so low, the London Stock Exchange needs to ask itself whose suffering is subsidizing those prices. A company which has failed to make full disclosures about its supply chain as required by UK law and where there are grave concerns about its factory working conditions has no place in London, she continued. A spring 2023 funding valued Shein at $66 billion, and the IPO could raise between $5 and $10 billion. Social supply chain and product quality management are the top issues for apparel companies in Bloomberg's ESG scores. Further, BI has issued a new comprehensive report that examines supply chain risks and accounting and much more. This report can, of course, be found on Bloomberg Intelligence's dashboard BI ESG Space Go. In June, a federal judge in Texas dismissed ExxonMobil's lawsuit against activist investor Arjuna Capital over a shareholder proposal the investment manager filed, calling for cuts in Exxon's greenhouse gas emissions. Exxon had claimed that Arjuna had no intention of improving shareholder value. Rather, it sought to change the nature of its ordinary business. The case was dismissed because Arjuna had withdrawn its proposal and promised not to submit a similar proposal, therefore making Exxon's claim moot. However, the judge in the case wrote that the trend of shareholder activism in this country isn't going anywhere. Exxon has 30 days to appeal. Whether it does or not, the company has already sent a clear message to shareholders and established a potential litigation blueprint for other companies to follow as they face climate or other ESG-related shareholder proposals. If the case were to proceed to a higher court, a different ruling could impact the ordinary business exception that the SEC uses to govern the no action process. As always, you can find a complete data set of shareholder resolutions filed at Exxon and more than 15,000 companies globally by going to BI Space Proxy on the Bloomberg terminal. And I'll now turn over to Lauren Foster to walk through how we can evaluate carbon markets on terminal.
Hi, I'm Lauren Foster, a sustainable finance market specialist here at Bloomberg. With the release of the Joint Statement of Policy and New Principles for Responsible Participation in Voluntary Carbon Markets, financial market players will be assessing carbon markets and the role that they play in corporate net zero strategies with more scrutiny than ever. To track the carbon markets at large, you can use our Global Carbon Market Monitor tool on the terminal. CO2e is a consolidated dashboard of prices, market-moving news, and research. Here, we can track carbon offset and allowance prices, along with relevant fundamental drivers like natural gas, LNG, and the global average CO2 prices. Next, let's analyze a company's approach to decarbonization and their use of carbon credits with Bloomberg Intelligence's BI Carbon. BI Carbon provides CO2 forecasts for more than 450 companies across the most carbon-intensive industries, representing about 60% of emissions from listed companies. In addition to the forecasts, you can use a screen to assess qualitative information captured from each company's target. The offsets column indicates whether or not a company has stated that it will use offsets to achieve its target. You can use the additional columns to determine the scope and timeline of the target and whether or not it has been validated by the Science Based Targets Initiative, also known as SBTI. For more information on this topic or anything else related to carbon markets, please refer to BI Carbon on the terminal. Thanks.
Thanks, Lauren. And as a reminder to our viewers, more data and research related to these topics and much more, of course, can be found on terminal by going to BI Space ESG Go. Thanks for joining us, and please stay tuned for next month's bulletin, and we'll see you then.